With that, we shall move on to the next keynote on practical problems and possible solution to volatility of exchange and interest rates. To present the keynote on this topic, we have invited Mr. Bingumal Thewarathanthri. And let me introduce him officially as Mr. Bingumal is the Chief Executive Officer of Standard Chartered Bank, Sri Lanka, and also the Chairperson of the Sri Lanka Bankers Association. An industry veteran, Bingumal has an extensive 30 years of experience in the banking and finance sector. Having joined Standard Chartered Bank in 2004, he has held several leadership positions in Sri Lanka and Africa, including the role of Head Transaction Banking Mauritius. In Sri Lanka, he was the head retail banking and a key member of the Standard Chartered Bank Sri Lanka country management team prior to his appointment as the CEO, and was instrumental in elevating the business channel and delivering impressive revenue growth. He is also a board member of the Ceylon Chamber of Commerce. Ladies and gentlemen, please put your hands together as I invite the Chief Executive Officer of Standard Chartered Bank, Mr. Bingumal Thewarathanthri.
Good evening. Let me first thank the Tea Exporters Association for inviting me and Ganesh for getting me into this forum. So my topic is actually, if you go to the subtopics, it's about immediate and medium-term outlook on FX and rates. The other one is the banker's perspective on the economic outlook and the view of the tea export business and the bankability. I'll touch a bit on the global economy because it has an implication to what we do here. So the global economy is growing at about 2.7%. Still, China is growing at 5.6, 5.7%. India is growing at 5.3%. So 2/3 of the economy is growing pretty fast while the US is kind of slowing down. Europe is slowing down, but I would say it's kind of settled. Even the US recession, I think there was a big, ha-ho about the US recession last year. I think we had a soft landing in our view. We'll go into a mild recession, but the world will recover fast. That's our view. Europe, again, we thought there'll be an energy crisis last year. Remember, we thought Germany will run out of gas. We had a decent Christmas. They managed the whole energy, stocks, and then they came out of it. So it was not that bad if you look at the two problems that we had 6 months ago. Now, specifically, why I'm talking about US is, US had done a lot of helicopter drops compared to other countries. Of course, they got hard currencies. Globally, all the central banks have printed money, sadly, during COVID, and there was inflation as a result of that. A lot of fiscal stimulus, of course, we did more than the others. We had different problems, but pretty much every country had done fiscal stimulus. As a result of that, we had to take the interest rates up. So global interest rates have gone up drastically by 100% in a lot of the markets. Our case is, again, very unique. If you could look at US, for the first time, we are seeing after a long time a hard currency interest rates at that level higher than some of the emerging markets. US rates today are much higher than some of the emerging markets. There's also this view that the dollar is highly, overvalued. If you look at the history of the dollar, how it has appreciated, there's a view that dollar should weaken. So there's a sentiment built there. And now the last rate hike, we believe it has happened. And we believe US will go into an easing cycle so somewhere in September, October, worst case November. November, December, definitely January, they should go into an easing cycle. So with US going into an easing cycle, you will see other central banks also probably taking the rates down. Now, our situation, coming back to Sri Lanka, I don't want to go back to the past. You know the story about the last 70 years, what we've done. I'll also touch a little bit about our story. But in a nutshell, we are $8 billion GDP, BOP, deficit country. We had $6 billion of worker remittances. And we had about $4 billion of tourism. We had market taxes at the time in 2018. We used to borrow about $1 billion from the market, so we were okay. We were managing, we were building reserves. Then COVID happened. Of course, tourism came to zero, and we kept the dollar to a 200. As a result of that, worker remittances came down by 50%. We had to default. There was no choice. But from the default to now, if you look at from last April to now you must be wondering how this whole appreciation happened. And some people thought it was political. Central bank is managing all these things. But Standard Chartered predicted dollar to appreciate with or without IMF. I think end of last year we said dollar will hover around 350 average. Even we were wrong. We never expected 300. We said 350 average and it will go down to 325 by next year. Solely because you're not settling your debts. And now you can clearly see your BOP gap is something like $400, $500, $500 million, and you have a worker remittances bill of like 500, then you have tourism of 150. So you're managing. You're only settling bilateral debts as we multilateral debts at this point, only $50 million for a month. So your current account deficit also kind of improving if you really look at it. So it's a dollar positive, rupee positive story right now because we are not importing a lot. Like Danath said, the interest rate plays a significant role in this whole thing. Even if you open up all the imports, including cars, we don't see the import bill going up until the rates come down. And how can the rates come down? US easing cycle is one thing, but we have our own challenge, DDO or the DDR, the domestic debts. Now the domestic debts are about $36 billion out of the total debt pile. That's a significant portion of the debts. Now the challenge is we are planning on, Dubinder will probably touch on this one, 3.2 trillion rupees worth of tax revenues. Out of that, 2.2 trillion goes for interest, right? Out of 3.2, 2.2 goes for interest, not sustainable. So I know their story about devaluation and all of that. The challenge is how do we reach these targets? How do we manage the fiscal policy? Sri Lanka's problem is a larger fiscal policy, not a BOP crisis. We saw the fiscal problem through a BOP crisis. We will never recover if we don't fix the fiscal issue. One is the tax collection, the other one is a broadening, SOE reforms, FDIs, all those things are important. If you look at the revenue side, we only see taxes at this point, and the tax base is very low. So Sri Lanka has a role to play in terms of bringing the interest rates down. So I don't want to go into the shape and form of DDO at this point. There are multiple formulas, different people are predicting different things. Some are proposing to exclude banking sector. Some are saying, central bank, I think it was openly declared that central bank T-bills will go through a restructuring. I think that's inevitable. The challenge is we hold in the banking sector about 4 trillion worth of bonds, another 4 trillion EPF, ETF. So 9 trillion worth of bills and bonds, and we have 32% of the total local debts in T-bills. And that's also, you're ballooning the problem by offering T-bills at 24, 26%. So average rate will be something like 14, 15%. And just imagine on a 36 billion domestic debt portfolio, your interest cost will be $6, $7 billion in time to come. And you're forecasting a revenue of, again, 9 billion, 10 billion. It's not sustainable. So debts won't be sustainable the way we are going, though we manage the BOP piece really well because we are not settling the debt. So once we get it right, we have to get it right properly. It's extremely important that we get it right the first time. Because if you look at Argentina, gone through multiple restructurings, right? Even, many South American countries, many African countries have gone through restructuring. As we speak, there's a conversation going on in Ghana. I think it was somewhat okay. Domestic debts were managed very well. Zambia is in a mess. Zambia's second tranche didn't come. Zambia has multiple bilateral lenders. Some bilateral lenders are now forcing the multilaterals also to take haircuts. So the entire thing has got derailed. It has changed the world order in terms of debt negotiations. So Sri Lanka has I'm just getting into my second part. Let me do a few predictions on the rate as well, since it was a big topic. We are of the view rupee will still appreciate to a level of 300. Anything below 300, now it's almost there, by the way. Anything below 300 will be a problem. Why I'm saying that is, rupee from a nominal standpoint has depreciated, initially depreciated by about 70, 80%. Now it has kind of appreciated, but still rupee has depreciated by about 60%. Now from a real effective exchange rate standpoint, that is your nominal exchange rate, as you adjust to the inflation, rupee has actually appreciated. So when you really compare your local bills, your local costs have gone up because of inflation. Now rupee is appreciating on the other hand, so you have a problem. So exporters will suffer. Anything below 300, exporters will have a really difficult time. Now the challenge is the importers are still waiting to import. Consumers are still waiting to borrow to import. So there's still a wait and watch kind of a thing. So with the DDO, hopefully, shape and form will wait. The interest rates will fall at least by 5-6% on the T-bill market, minimum, right? So, but still your policy rates are like 14, 15, 16, right? So your policy rates to come down, there should be an easing cycle. Central bank should come and say, now we are okay, we're going to go into easing cycle. We believe easing will be best case, end of this year. Then only the real extra interest rates will come down. Again, we are of the view that interest rates will never, I would say, won't be single digit for a long time. Because it's very artificial if you bring it down to a 9%. It's not possible. It's absolutely not possible. So interest rates will hover around 12, 13%, but at 12, 13%, I'm talking about AWPLR now. 13% AWPLR, I think clients will borrow. Clients will borrow personal financing at 15%, people will borrow. There can be special arrangements for mortgages at maybe 12%, 13%. People borrow and build. Because today the construction industry is down by 40, 50%. Some have completely gone out of business. So if you're forecasting, especially for you, I would say at least expect a stronger rupee in the short term. In the medium term, don't expect more than a 7 to 10% depreciation on the rupee. Generally, an emerging market currency depreciates by about 5 to 7% every year, INR and all these currencies. Now, if you look at rupee, we capped the rupee at 202 or somewhere there. And then if you add a 10% to that for 3 years, rupee should land at around 270. So even at 230 from a nominal standpoint, rupee has depreciated a lot. So that's the importer's perspective. But we are of the view anything below 230, there'll be an impact on the worker remittances, there'll be impact on tourism, there'll be impact on exports because you have a lot of domestic expenses. All those challenges are there. Now coming back to how you manage it, of course, forwards is one option available depending on the premiums. But again, I would say just play safe. You have to have you want to keep your stocks low. Don't, people buy 3-4 months and try to take the price advantage sometimes, but it's very risky right now. It's very, very risky to, go high on stocks. Your cost should come down, your automation should go up, should go into a capital light business model. So building infrastructure, I know Sri Lankans love to have the largest warehouse, largest factory, beautify the factory, all of that, that's all history. So you have to go really lean in terms of how you maintain brick and mortar. If you can rent, go for rent. Why not? If you can go for partnership, go for partnership. It's very important. So there's no magic answer, sadly, because rupee is appreciating in the short run, you will bleed. Some of you will bleed. Especially if you have stocks bought at 340, planned for 340 and all of that, you are bleeding as we speak. So artificially, you can't control the rupee because central bank is also very reluctant to intervene in the market. You can clearly see they got very clear-cut IMF guidelines. Thanks to central bank, actually, it's hovering around 300. They bought up close to $1 billion. They kept on buying because they're building up reserves. Now, they have a target of something like 1.2, 1.4. Once you go to like a 4 billion level, now it's very close to 3 billion. End of this month, I'm of the view we should be around close to 3 billion. Moment you reach 4 billion, you're okay. And next year we'll be another 3-4 billion, and we are planning on at least $1 billion of FDIs for the 2 years, 18 months. I mean, you will come to a comfortable $8 to $9 billion of reserves, and you're not settling debts still. So the negotiation needs to start settling from 2025 or maybe end of 2025. So these negotiations are ongoing with the bondholders and with the bilateral lenders. Bilats generally will agree for a postponement as long as they get the money back. The challenge is now everybody is asking for a haircut. Everybody is pushing, everybody is saying let's have an equal participation. So the recovery for Sri Lanka, we got a very narrow path. Comparatively, Zambia and Suriname, those are the two recent examples I can take. I don't want to compare with Lebanon. Lebanon has completely gone down beyond repair. Suriname, Zambia, I think Sri Lanka has done reasonably well. From the staff level agreement in September to get the EFF in March, from EFF to now we are not even June, currency has appreciated. We have managed the BOP, worker remittances have come back. Tourism is continuing. Of course, May is the lowest month generally, but still I think we'll hover around 65,000-70,000 tourists this month. The story is very good. There's a lot of positivity in the system. There are enough people to invest in Sri Lanka. We have to get the policy framework right. We have to get the policy consistency right, more than the framework. We can come up with a framework. If you change in 2-3 years, we have a problem. So investment climate is not bad, but everybody is waiting for the rating upgrade. So conversations are happening, mainly in the energy space. Energy is a big area that people want to come and participate, be it crude, be it power and energy. Those are the two areas we see billions of dollars of investments coming into Sri Lanka. But the policy framework is still not very clear on the lands and things like that. But in terms of revival, the timelines for you to understand, so now we are negotiating the DDOs, negotiating, having those discussions. DDO will get published hopefully, now President said September. I think he meant, what he meant was the total debt restructuring. DDO should get finalized by May. We can't go on for another T-bill cycle at 26-27%. So if DDO is finalized by end of May, then we go into the third stage of negotiation with the other creditors, external creditors, and that will hopefully come to an end by August, September. September end, there's another IMF review. They've done the first round. They're doing the first round now. Second round will happen somewhere in July, August. September end, they do a proper review, and they'll do a EFF tranche 2 in early October. When they do the EFF tranche 2, they look at, how far have we gone with the debt negotiations? Have we had a meaningful progress on the debt negotiations? That's what they say. the technical word that they use. They would expect us to complete the domestic debt restructuring by that time. They would expect us to complete the external debt restructuring, sign the memorandums and all of that. Now, if we do all of that, even before IMF second tranche, we will get a rating upgrade. Now, the rating upgrade, don't expect anything big. We will go from a default rating, maybe one notch above, CAA2, CC, those ratings. Don't expect anything fancy. We will not go to the international bond market. We'll be slightly better than a Zambia or a Ghana. But like a Kenya for that matter. Kenya lost market taxes, but they are okay. Pakistan lost market taxes, they are okay. They're not in default yet. So we'll get one notch upgrade and we should be okay. So that's the first step to watch. Moment that happens, rates will fall further. Even rupee rates will fall further. And we also have to see how the bond market reacts to the foreign investors, because right now we got $400 million of foreign investors in the rupee bond market because the rate increase. Even with a haircut, they are thinking better to come to Sri Lanka and invest at the 25-30% whatever rate. Even if you take a haircut, still you're okay. That's a call that they're taking. These are vulture investors, 5% of a wealth fund, looking at exotic, difficult emerging markets. So those investments are coming. Still, there's a lot of room in that space for us to attract $1 billion or $2 billion. So just imagine that money is also coming, and that's excess. So we are converting every day as an international bank. I see those flows every day. Even in the middle of the night, people call and ask, can I invest tomorrow morning? So that's the kind of momentum we have in the local bond market. So that's a negative sign for you because more dollars coming in. The positives of, if you look at why a rupee should depreciate, couple of things, the rates coming down, of course, opening up vehicle imports. After debt restructuring, that should happen. Ideally, after debt restructuring, we won't be able to control the vehicle imports. WTO will say, you have to open up vehicle imports. Moment that happens, Sri Lankans, at least $100 million for a month for vehicles. That's going to happen. Or the black money will come out. I hope the internal revenue will do some work there. But the money will come out, right? We might not lend, but for those things, but money will come out and we will start importing stuff. So that momentum you'll see October, November, hopefully another positive conversation for you because rupee will depreciate at that point. So that's a timeline to watch. September, October is a safe time zone. Until that time, if you can hedge it, well and good. Of course, look at the premiums. At what quantity, I don't know. You have to take a call based on your businesses. But outlook for Sri Lanka, we are cautiously optimistic. Right? We've done extremely well as a country. Coming out of a crisis. Now, if you compare with last July, you have to compare with last July. You can't compare with 2014, 15, 17 and all of that. Those are days we were going to the market and borrowing. So you can't compare with that time. We have to compare with last year, sadly. And things have improved drastically compared to some of the other markets, downgraded markets. So have some hope. The work is happening. It's a very narrow path. We also have to look after our own industries. I also head the banking industry as a chair of SLBA. So I talk about DDO in many forums, but now we come to a conclusion that now we are waiting to see the final outcome. We basically said, if you want to touch the banking sector, look at the impact to the large economy. If the banking sector goes down, the economy goes down. So there should be a banking sector to revive the economy. So that's another very important piece that the government will have to manage. If you let even a small bank go down, there'll be a bank run, and then there'll be a domino effect. More banks can go down in a small market. It won't be like a Silicon Valley situation. It won't be like Credit Suisse. We don't have the clout to do that. Our central bank today is navigating many, many challenges. So they won't be able to come and rescue a bank. So it's very important that we handle the sector separately and also recapitalize central bank. When central bank goes into a domestic debt restructuring, they'll reprofile all their T-bonds. So that has an implication as well. So outlook, hopefully, stable. Would be stable by October, November. By that time, there'll be many, many volatilities. Dollar to forecast at about 325 by end of this year. Next year would be good. Interest rate should hover around 15%. Policy rates to come down, hopefully by end of this year. Then the other last thing, I think the outlook, you all have also, I think, put another topic. I'm not an expert in the tea industry. Outlook for the industry, the more important, the bankability and the investments of the industry, etc. See, the thing is, tea industry, in my view, has done its job for a very long time. It also will serve the country for another probably 100 years. But in terms of how it has evolved, we cannot be very happy. So that's the reality we're in. If you start from the labor market, and RPC store is another one. RPC contributes like 25, 26%. Smallholders are much bigger now. That says a lot. If you look at the labor markets and the poverty levels in the country, before the pandemic, Sri Lanka's poverty was something like 16, 17%. Larger part of that poverty, group of people in poverty would be in the central provinces. So that says a lot. So we, as citizens of Sri Lanka, we are responsible for this. So we cannot keep on thinking like, okay, no, don't worry, somebody will come and plug the tea. Okay, of course you can go into automation. There, people are looking at drones and all of that. That has to kick in at some point. But I think the partnership models are critical. The smallholder model is a partnership model, in my view. There's a lot of pride in what they do. They have their estates under them. They participate, they work. Now in the larger estates, we see a larger challenge. That's one. The second thing is, if you look at the growth of the tea industry comparatively other commodities in the world and how other industries, key industries has evolved in other countries, we have a lot of potential in our view. So I know this, it's very sensitive about this whole, our Ceylon tea brand and how do we protect it and how do we make it bigger. You can only do so much with that brand, but I think we can do so much as a tea hub. So, and what Dubai is doing today, of course, they don't have their own brand, but we have to learn a little bit from them. Dubai is one example, Germany is another example. So do you want to be like a very small industry, niche, high quality? You can do that. Whether it's sustainable for a larger economy of $80 billion, you have to seriously think about it. Our export basket is what, $10 billion. We've not done a great job in exports, right? Just 10 billion, 5 billion apparel. To do 5 billion, we bring 3.5 billion worth of goods to the country. So apparel net is about $1.5, $2 billion. Tea is also very close to that, actually, if you really think of it. Tea is significant from that perspective. So we have a problem. We don't have enough, goods in the basket, in the export basket. So we really need to see how we can open up, how do we bring governance and protect the Ceylon brand separately, and how do we do other things, in a secured area. I don't know. I mean, there are models in the world for this kind of stuff. So I'm not an expert, but we really need to think through. How do we make it bigger? How do we make it a larger economy? The whole 10 billion is not enough. Just imagine 1 billion for tea is definitely not enough. So something to think through, a lot to do with the policy framework. The other challenge is your markets, your Russia, your exotic Middle Eastern markets. The global banks are very anxious about those markets. There are many sanction hits when you go you export to those markets. So as a result of that, you also work with different banks, different ways of working, hubs in Dubai, hubs here, hubs there. You do multiple things to manage this business, not sustainable. So you have to look at other markets as well, even manufacturing in China for that matter. Those are big opportunities because Chinese love the black tea, if I'm not mistaken. The huge opportunity for Sri Lankans to go out and do stuff as well, and also do stuff in Sri Lanka. If you don't open up the Sri Lankan market, I believe the sophisticated clients will go out. Maybe they've gone out already. Gone out already to markets like Kenya and other exotic places, and maybe even Russia. And you manufacture in that market for the market, and also you do a little bit of Ceylon tea for the exotic clients. And I think some businesses have already gone. Because the beauty of this is the know-how of the tea is in this room, right? You know how to do this. You know how to do RTDs. You know how to blend. You know how to take it to the next level. So you can do it. So it's a matter of who wants to do it. Are we ready or not? So I'll just leave it there. I see huge potential in the know-how that we have and the opportunity as Sri Lankans. Thank you.